how funds can manage human resource services effectively through technology-based outsourcing, the PEO solution. Robert Atkinson, COO of Mirai Asset Securities USA, and the call's moderator. I am very pleased that we have Tim Frazier and Steve Edney of TriNet, two veterans of the hedge fund outsourcing business. And before we meet Tim and Steve, I want to thank the sponsors of the New York Hedge Fund Roundtable, which make events like these possible, including Alston Bird, Tilly, Grant Thornton, Kaya, and the Institute. Now, many of us may recall Mark Yusko's comments at the Hedge Fund Roundtable January event, where he said we would soon be entering a boom period for the creation of new hedge funds because of the unraveling of QE and the return of more volatile market conditions. Startups, along with small and emerging managers, must grapple with a great deal of business risk in addition to running a portfolio. Operating these funds requires both business skills and resources. So what is a PEO, and what relevance to hedge funds in managing business? Now, this is going to be a key theme of today's call. So, Steve Edney, what are the scope of the services provided by PEOs?
Robert, yeah, so a PEO is a professional employee organization. Essentially, what we do is we provide an outsourced function for administrative human resources. Basically comprised of three core areas, which is payroll, benefits administration, including healthcare, workers' compensation, etc., and then back office legal and compliance.
And Tim, describe what are some of the real-world benefits that hedge funds and their employees can get through a PEO?
That it kind of is a multiple number of ways. Through PEO, obviously, they're going to have less administrative work and less headache when it comes to just outsourcing, just dealing with the employment law and dealing with administering employees. But in terms of our real-world money, just from PEOs in general, they generally, just a study that was done last year by NAPEO, which is a national organization that covers PEOs, they said companies that employ a PEO or have a PEO are 50% less likely to go out of business because they can focus on core business. Companies that are generally, they have maybe 15 to 20% less turnover because they're using PEO. So those are some real just kind of business numbers and statistics. In money, we've seen clients that are 18 or 20 people save $80,000 to $90,000 on medical insurance, even out of our fee. We've seen firms that are 2 people save several thousands of dollars just in their deductibles, just because they've been able to achieve better plans versus what we were able to do in terms of a benefit perspective and getting health insurance on the open market.
Okay, so Tim, you mentioned employment law. Now, employment law can be very complex and burdensome. So how do PEOs ease and mitigate these factors, Steve Edney?
So in terms of employment law, it's becoming an increasingly complex landscape. What a PEO does is essentially allows a firm to shift its liability regarding employment law to that PEO. For example, there are a lot of laws regarding large groups and healthcare coverage ratios, given you ACA rules through Obamacare. Things like sexual harassment, where PEOs will assist in annual training, make sure that the firm is covered from a liability perspective there. Really anything related to, potentially troubling firings and hirings that, these firms go through. A PEO can help advise the firm as to the best methods in which to accomplish this without, liability on itself from suits, etc.
And just to clarify something, you mentioned ACA. Now, of course, ACA refers to the Affordable Care Act, correct?
Correct.
Okay, good. Tim, let's turn our attention now to as I indicated in my opening comments, the risk that comes to the smaller hedge fund manager. Plenty is a big part of that, right? So regardless of a hedge fund strategy or size, they are still responsible to perform many different jobs and functions. In turn, some of these jobs and functions are now outsourced to various vendors. As I understand the PEO model, it enables the hedge fund manager to really consolidate some of those vendor relationships. Is that true?
That's exactly true. With the PEO, in general, you should be able to consolidate anywhere from 2 to 11 or more vendors. And that's everything from a payroll company, to a medical dental vision provider. There's expense reimbursement reporting. There's maybe an HR data management system. There's a 401k provider. There may be a provider of employment practices liability insurance, even a performance review process or recruit, kind of like a hire management process. Systems or data systems that people use for that. Those are vendors that we usually see. Clients have that a PEO can do replace all of those into one.
Everyone's attention to the fact that there is another slide here, which you might want to. Let's go on slide. See that? Okay. One of the things I noticed down at the bottom here is we talk about support compliance, and clarify that. What exactly does support compliance mean?
Compliance is really everything from, like Steve mentioned earlier, on Affordable Care Act compliance, all the way to just your real-time, HR laws and HR questions that are coming up, where real time with with the hedge fund, the situation that's coming on, we're there to support and keep the clients, so that they're not saying the wrong thing during the exit interview, or they're not saying the wrong things at the front of hiring someone.
Yeah. But I just want to be clear. What we're not talking about is regulatory compliance.
That's correct.
From the standpoint of the 40 Act or other rules and regulations that a hedge fund manager might be subject to with respect to investing securities.
That's absolutely correct. It's Steve here. Yeah, so we don't get involved in the kind of FASB or SEC compliance, if you will. And just to add a couple things to what Tim said in terms of support clients. So it's also at the very basic level. So, regardless of what state you're in, you obviously have to remit certain kinds of taxes. For example, like Social Security, Medicare, state unemployment tax. Those taxes vary widely depending on what state you're in. So we make sure that all our clients, and we have some clients that have multiple locations in the tri-state area. Maybe they have an office in California. All local labor laws and tax laws are different. We are liable to make sure that all those correct taxes are being remitted, and the firm is adhering to the regulatory, basically the compliance in the state in which they operate.
Okay, so Steve, I think that begs the question: what different benefit packages are you seeing around the hedge fund industry? What's the lay of the land here?
Yeah, good question. I mean, certainly, we see, funds definitely the higher end, of the service offering, I would say, to their employees relative to a lot of other businesses. Typically, we see pretty rich benefit packages. Hedge funds typically take pretty good care of their people. That means typically the healthcare side, we'll see pretty good plans with, kind of low deductibles, decent out-of-network coverage. And on the financial side, a lot of companies are covering 100% of that cost, or at least 90%. That's kind of the typical lay of the land. Also, they're offering dental and vision plans as well. So, it's good to be an employee of a hedge fund versus a lot of other industries.
Yes. Now, it sounds like PEOs provide a range of services. What are the obvious services they can't do or can't perform?
Well, yeah. So, one thing a PEO cannot do is we're not going to do recruiting for you. Something else we're not going to be able to do is, Gen PEO model isn't going to really work for a company that's over 100, 150 people. And that's really because, a company of that size is able to get some better economies of scale on the health insurance pricing. They're going to be able to get the large group pricing. And then also just, oftentimes when you get to that level, there's more need for specialized, the in-house HR capability. What we find is, if the client may be under that, 100-person threshold, they still have internal HR, but they're able to really work on more level HR stuff. We do the administrative stuff. But if they're larger than that, oftentimes they have that in-house. So those would probably be the biggest things that we can do.
And what typical business structures a PEO accommodates, and do the partners have to take wages in order to receive benefits, Tim?
Yeah. So, we work with, any type of business setup, LLC, C Corp, S Corp. Generally with a PEO, do not have to take pay. They can be zero pay or K-1 partners. They don't have to take W-2 wages or like a minimum wage to be able to receive benefits. And that's one of the big benefits of the PEO, because you're on the PEO platform. And because of the platform, you don't have to have that. That saves the partners from having to pay workers' comp costs. I'm paying, obviously the relevant FICA through the taxes.
Steve here. I'll just add to that. I would say probably about 95% of our clients have at least one K1, so they're a member of an LLC or partner of a GP LP. As Tim said, they can come on the platform, they can receive all the benefits. But a K1, they can either run that payment through our system or not. If they did, we would obviously take out taxes. But certainly, what I think one of the big benefits is are the PEOs in general, their ability to accommodate K1s.
Mm-hmm.
Okay. So, just an observation that I've made about the hedge fund industry, and you may agree, you may disagree, but it seems to me that increasingly investors, both institutional and high net worth, have been focusing on operator due diligence. How does a PEO help with investors? Is there any advantage, you think, to having a PEO resource from the point of an investor?
Yeah, I think it is becoming increasingly important. From the perspective that I characterize it as institutionalizing a fund. So a lot of investors, and I work a lot with some fund funds, who consider having a PEO just one of the check boxes. Now, I don't think it's the most important checkbox, to be frank. I think it's certainly probably number 4 or 5 on their list. But I think increasingly they look to it and it kind of verifies the fund's institutionalization, that they're serious about their employees, they're providing good benefits, and moreover, that to have any liability regarding employment law and the ACA rules, etc. And so really it just allows the manager to focus on what the manager does, which is in front of the screen and trading stocks and making money and growing business and raising assets, and having the distraction, which can be significant, of the administrative aspects of human resources.
Okay, I think that makes a lot of sense. On the coin, how does PEO help to attract and retain top talent, you think?
Well, I think that this, like I said earlier, with PEO, one of the biggest advantages for a PEO is the large group, access to the large group medical benefits, and just really that full suite of benefits. Oftentimes we'll see a group of 3 or 4 people spin out of Morgan Stanley or Goldman Sachs or whatever, and they're used to large company benefits, and they're going to bring some of the other the one who wants to bring those other employees over with them, they have to offer the high quality benefits. It's not just we'll pay you the money. It's also going to make sure you have high quality healthcare benefits, have high quality healthcare or dental, vision benefits, have a 401k, have that infrastructure so that when you're recruiting people, you actually have a profile link that goes out that says go to this link, put in an application, let's give you my data, things like that. So it will really help the office infrastructure. Just makes you look like a more professional organization, and it doesn't make you look like a 3-person company that's just barely having everything together. It's just really that that company that is offering the benefits, has that technology, that infrastructure backing them up. Employees can easily get answers without having to feel like there's no one around to give them answers.
Fair enough. Now, the Affordable Care Act has a great deal of attention. So, for Vantage Point, what do you see as some of the upcoming changes, potential changes regarding ACA, and the impact that these changes might have on the availability of the higher quality plans that you were describing a moment ago?
Some of the changes, outside of a PO, I think you could see a lot of changes in terms of maybe the ability of plans. Who knows what's going to happen with Obamacare or whatever they're going to call it, care. I think a lot of those, if you kind of go into the open market, with the different exchanges, through the different state markets, you're going to see probably, watered down plans, and, maybe the premiums won't be high, but I don't think you're going to be seeing as good of networks. What it can do is shelter you from some of those changes with ECA, because those are some of the unknowns that we don't know. So PEO, generally, with a PEO, your plan designs aren't going to change. If you look over the past 10 years or so of health insurance plans, everyone can pretty much tell a story of, hey, I had a plan that was good a while ago, but now it's not good anymore. And my doctor that used to be in network is not in network anymore. Generally, PEO can shelter you from those types of changes. So, like I said, I probably see more lower quality plans just in the general market of things, and there may be becoming more of a divide between a large group and small group versus pricing and what deductibles are and networks and availability of doctors.
Yeah, I'll just add one point to what Tim said. What I'm seeing with another aspect of the ACA that some people may or may not be aware of is that a lot of the states have started to, essentially, not be compliant with the federal law and remove themselves from any obligation of offering exchanges, right? So, way that a hedge fund or small business could go in terms of the healthcare and say, hey, you know what? I'll just go to the exchange of my state and I'll try and go get a plan. Now, the problem is that a lot of those states are withdrawing from those exchanges, so it really leaves people with options in the marketplace.
Any thoughts on those states? I mean, obviously, the hedge fund industry is fairly concentrated from a geographic standpoint. So, most of our members are located either in New York, Connecticut, New Jersey, et cetera. What impact do you see that having on the states of interest to, or the states most applicable to the hedge fund business?
That's a good point. I mean, and just like the majority of our clients, certainly located, tri-state area. What we've seen is over the last, 12 months, I've had a lot of, prospects coming to me saying that, the plan went away because the exchange, because people that were involved in the exchange went bankrupt. So exchanges still do exist in the tri-state area, but the big problem has been a number of pretty large providers actually gone bankrupt. So that's been a big problem.
UHC, which is one of the providers we use, they actually they backed out of the exchange, and Oxford is still, I think, in it, but UHC is not with the plans, and we have a lot of better quality plans with UHC plans than other providers, just in terms of the best insurance providers out there right now.
Good point. And to Tim's point, a number of the large healthcare companies, United Healthcare lost about $1 billion in 2016 on Obamacare. So they've withdrawn from a lot of the exchanges. And to Tim's point, to the extent that there are providers out there, of course, I said some have gone bankrupt, which is a problem. They tend to be very localized. For example, there's one in Connecticut called Connecticut. I think it's CT Care is the company, and very plans and a very limited area where you can actually go and see a doctor. So hey, you're in New York and you've got the Connecticut plan, you'll have trouble finding an in-network doctor.
And again, it seems to me that if I'm understanding the thrust of your comments here, that one of the benefits of a PEO is all of these details, which are moving constantly. There's a lot of moving parts here. A PEO is responsible, in essence, to manage that whole process. So as things change in Connecticut with respect to this, that, or the next thing, it's the PEO that is responsible to the customer, which is the hedge fund, to stay abreast of these changes and to come up with appropriate solutions.
Absolutely right, Robert. So we have, that is one of our primary functions as a PEO, and all the PEOs that are in the industry, is to constantly be monitoring, change in healthcare law, labor and employment law, tax law, federal tax law, whatever it is. That comes back to that mitigation or shift in liability, if you will, from a firm, to a PEO. They are liable to make sure that you are compliant with all those aforementioned factors.
I mean, PEOs maintain things like E&O insurance, and do they maintain fidelity bonds? Anything like that? Any insurance?
We maintain we don't provide E&O insurance for a hedge fund or anything, but we obviously are covered on our own through bonding, through insurance, but we don't provide E&O to our clients. But
okay.
We have to operate. That's kind of one of the other points on PEOs. There's an industry accreditation process called ESAC. It's called accessesac.org, and that really, I think that's kind of like the FDIC of the PEO industry, that just kind of just regulates us and just makes sure that we have enough cash reserves. We're able, we're taking, companies are taking care of payroll obligations, because it's a lot of responsibility if you give to a PEO, pay your people, and make sure the benefits don't expire. A PEO has to have the reserves and has the team to be able to put that together.
That's to know. That's good to know. So let me ask you something else. Variance. What do you see as the typical? What's the typical client for a PEO in terms of, let's say, AUM? And I know that's in many ways a very unfair question, but because every business is a little bit different in terms of break even and revenue and so on and so forth. But what's the typical PEO client look like?
The PEO client and AUM kind of does run a broad spectrum. I see a lot of clients that might be in that, million to 250 million mark in terms of the range, where it might be anywhere from 2 to 5 or 6 people. They're doing just kind of the growing the business part. Maybe they have an administrative person. So I would probably say that is a typical client of ours. We do clients that are in the multi-billions in AUM. We also have clients that might just have $2 million of their own money, and they're one person, they're leaving a large firm, and it makes sense for them to use a PEO so they can get better insurance. So it just kind of run that range, but that would probably be that typical 5, maybe 10 people.
So let me delve into maybe some of the operational aspects of how a particular hedge fund is supported by a PEO, okay? fund assigned a team? And if so, members of that, what are the members of that team? What disciplines would they be involved in?
Yeah, that's a good question. It certainly ranges, depending on the PEO. But let's talk about let's establish larger PEOs. What a firm would get is they would either get a dedicated, client services associate, for that firm, meaning primary point person, for all the employees of that firm. Other models within a PO, sometimes there'll be what I call a service team, so maybe 2 or 3, different points of contact. And then thirdly, there may just be a call center. It may literally be only 100 number that people call. Now, what those people do, whether it be a call center, one person, or a team, if you will, they're really there to answer any questions related to the administrative aspects that a PO managing for them. So, payroll tax deductions, 4K contributions. They have claims with United Healthcare that they're having difficulty with. The PO can assist them with that. So it's a broad range of issues, but it's your day-to-day questions about the services that POs providing them, generally surrounding payroll and benefits. Maybe there's a difficult termination and the PO's advice in terms of how to go about being compliant with labor law, because as you know, lawsuits can get very expensive. So it's really a broad range of questions, but there is always a team or a person there to answer those questions for the firm and its employees.
So the firm you work for, TriNet, is a recognized leader in the PEO industry. Is it fair to say that fund clients, that hedge fund clients benefit not only from the scope of expertise that it brings to the table, but from an economic standpoint, piggybacks off the scale economies that you have, let's say, your purchasing power with different vendors?
Yeah, everything from purchasing power to different vendors, and because we only work with hedge funds and just higher-end financial services firms, our pooling is all highly educated, more wealthy people, and because of that keeps renewals low, that keeps the plans low, that keeps kind of that quality pool of people that's really important in terms of our business model. So our PEO model, has not pooled in with a landscaper or anything, right? And so because of that, when you do that, it economies of scale, obviously, and then pools of people to it helps keep that benefit quality up there and pricing up there.
Yeah, I'll just add one thing to that. Because we are one of the only POs out there that's actually verticalized, meaning we do have different product lines for specific industries. We really understand the hedge fund business. So, majority of our clients in the business that we work for, are hedge funds and high-end private equity firms, etc. And we really understand their needs. And what are those needs? They're managing money. They're very demanding. They have high level of service, minimal disruption to their business. So really understanding your client and delivering a service that is tailored towards their needs is really one of the key differentiators.
Well, I'm shocked that you would say that the hedge fund community is a very demanding clientele. That comes as a surprise to me. But
my apologies.
How many clients do you have?
We have over 3,000 clients, across the U.S. Financial services side. Again, majority of those are located tri-state, but we do have a number in between, the east and west coast, and certainly, obviously, in California is pretty big. About 65 to 70% of our clients on the financial services side are hedge funds, and the rest comprises, in order, private equity, registered investment advisors, family offices, and really anything that touches that financial services ecosystem is an ideal client of ours on the financial services side. But again, it is predominantly, our bread and butter is predominantly hedge funds.
Okay. So if if I've been good notes here, what I'm walking away with is that you cover healthcare, which includes the medical, I think, and the dental, and what about vision?
Our PEO should offer vision, everything from anything from like a voluntary plan that's just basic all the way up to like the top vision plan that you can get. You always offer different carrier options.
Okay. And what about flexible spending accounts?
Spending accounts are actually part of a PEO's admin fee, so you shouldn't pay an extra for that. So that's part of it as well. That's for individual and also dependent care.
Yeah, flexible spending is basically pre-tax dollars for co-pays, deductibles, etc. Prescription drugs, and also there is a dependent care aspect of flexible spending, which is called dependable care reimbursement account, where you get pretty significant. I think the IRS is at about $5,000 annually, and it's all pre-tax. And you all know it's very rare that you get free money from the government.
Okay. And what about life and disability insurance?
So one of the nice things about a PEO is both life and disability. There's no medical that's needed to get group life. So without some sort of medical check, you can get up to a certain dollar amount of guaranteed life insurance, through the group side. You can also buy supplemental, obviously, as well. But then there's short-term disability and long-term disability. Just range basic coverage on the short-term side to better benefit in terms of what's paid out every week to long-term disability. And
retirement and other benefits. What's covered there?
So 401k is part of it. Generally a PEO is using a third party like a MassMutual or Transamerica, and is basically is kind of like the fiduciary of the plan, and they're kind of controlling that piece of it. But 401k, there's a WageWorks or like the transit benefit, Metro cards, parking, and then also some PEOs offer international employee travel assistance. So if you do have employees that are traveling internationally, and there's a doctor visit or whatever, we can get you immediate medical attention, and then in a third world country, could take you to England or Germany or someone for quick attention, quick medical attention. So those kind of round out that suite of benefits.
Oh, gentlemen, are there any other aspects to PEOs that you think hedge fund managers and employees should be aware of?
One thing I would say is if you are entertaining the idea of PEO, just in terms of looking between different companies, right? There's the large ones, which would be, TriNet's one of the large ones, ADP Total Source is one of the large ones, Insperity. So the top three largest PEOs out there. There's a whole host of smaller ones. You want to look on the accreditation side, who's accredited, because it just makes you a company that can handle a blip in business. So I would say that just look at like proposals and pricing. Just maybe getting transparent pricing, because one PEO will charge different than what another PEO charges. But medical insurance could be a different price to the first PEO than the second PEO. So just have some transparency behind what are you paying for? What are you paying for medical? What am I paying in the admin fee? And what are my nickel and dime fees? What are my little per occurrence fees? As you kind of look at a PEO and you're trying to compare them, they all provide great service. We all provide, valid payroll, so not have issues, not going to have errors. But it's just, what's that transparency in building? I think that's how we see that's important to a lot of people.
Yeah, I would add to that on the transparent side. I think it's of particular importance, to the financial services community. Obviously, everyone wants transparency, but we do see that as a very high demand item, if you will. Typically dealing with the chief operating officer or chief financial officer, perhaps the chief compliance officer of our respective clients and prospects. And they want to know line by line what they're paying, that they're not being nickel and dimed. And I think Tim hit on a very key point, which is have absolute transparency.
Okay. So at this point, what I'd like to do is turn over to the audience and see if we have any questions. So there are a couple of ways that you can one is the chat feature here on the WebEx, and the other is by emailing me. So I've actually received a couple of questions via email, so why don't I start with those? And I think maybe some of this has been covered, but I think it bears repeating perhaps. But the questions was, what is the key reason a fund manager with 2 or 3 employees would use a PEO?
Yeah, so I would say in our experience, it's a pretty fun person group that use PEO. It's really benefits. It's really the health insurance that they can get outside. If there's going to be 2 or 3 people, they're not going to anybody else, and it's just at that level for quite some time, and everyone's in New York. The next reason is healthcare. They're still saving enough money, getting much better plans than they can get on their own. That's probably the biggest driver.
Okay, and another question is, a similar question is why would a company with 20 or 30 employees use a PEO?
We have a lot of PEOs deal with companies that 20 or 30 employees. There's a couple reasons. Number one, just the administrative aspect, dealing with multiple vendors. As Tim said, a lot of companies have state vendors. Some with 401k, flexible spending. They've got to negotiate with brokers every year on their renewals. And so really they just want to, they believe in the benefit of just outsourcing. So they want to focus on strategic human resources versus the administrative stuff. I mean, no one becomes a CFO to want to do payroll runs and negotiate with brokers. So I think that's certainly an aspect. The second aspect is what we typically see is companies relatively rich healthcare plans. Typically they'll be able to generate quite a lot of savings by coming to a PEO, given the pooling nature of our business and the economies of scale.
So it's savings, but also, and just to add to that as well, person group, it's different cultures, different people, different areas, a country or the world, so that can add some complexities to the work environment. So, and PEO is there to help address some of those issues and help keep companies out of trouble. So that would probably be something else that companies of that size really can start, on a PEO for. And then just maybe administrators, like just the support, the help of an employee, where we have a lot of 20, 30-person companies where the employees call the service associate to understand, to have some benefit questions answered, right? And it's instead of 20 or 30 people going to one admin or going to the CFO or to the COO, they have a dedicated team that they go to ask that CFO or COO would have to basically defer to someone else on anyway.
Okay.
That type of activity.
So another question that's just rolled in here is, again, we noted the fact that PEOs provide a broad range of services, including health care, life and disability insurance, retirement, and voluntary benefits. Are these services available? Can they be cherry-picked? Can they be unbundled? Or is it really a bundled, an all-or-nothing type package?
That's a great question. So generally with PEOs, it's all or nothing. It's a bundle package. So with they have to do payroll, they have to offer medical, right? Those are the things that a PEO has to do for that company. Kind of ours, our client could easily get a 401k somewhere else. They could get their own, long-term disability or their own life insurance or those types of benefits outside of a PEO. PEO have to do for the medical, they have to do the payroll. Obviously, they provide the HR support. So they can't really spin off the HR support just for one company, but not do payroll benefits. They have to do all this.
Yeah, I would just add to that. I mean, I would say about half of our clients, obviously, if you're a startup, you're taking the package because you don't have any other existing providers. But, let's look at a client or a prospect that, 20, 30 people, they've been in business for 5 years. have all these different multiple vendors. About half of those will take our 401k, and half of them will just keep their own. The 401k is not our core competency, right? So the POV, the core competency is the payroll, the administration of benefits, and that kind of back office legal and compliance. The 401k is an add-on, and companies, see any companies that I'm not going to come to a PEO because I already have a 401k. I mean, sometimes they'll keep their own, sometimes they'll adopt ours, but it's not a swing factor in their decision-making process.
Okay. Do you have any other questions for the audience here? Okay. First, I want to thank our speakers, Tim Frazier and Steve Edney, of Ryan, for sharing their expertise, I think, in a very crisp and succinct fashion. I'd also like to thank the audience for spending their lunch hour with us. And once again, I do want to acknowledge the of our sponsors, Alston Bird, Bloomberg, Baker Tilly, Grant Thornton, the CAI Association, and the CFA Institute. Until I hope everyone has a good month, and again, thanks to Tim and Steve for sharing their expertise. That's about all we have today, and look forward to speaking with you all next month.
Thanks, everybody. Cheers.
Bye-bye.